Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Today's video is going to be going over the CISD, right? We're just going to be hopping straight into the charts. I'm not going to do like a little diagram or anything. If you don't know what a CISD is, go watch a video explaining how it's formed and everything. But I'm going to be going over how you can be using this with everything that I've taught so far, because this is how I've been entering for like the past 4 or 5 months now. This is literally all that I follow. I've been using it for 5-6 months, like I said. So we're going to be going over how I enter trades. That was my phone. But things you need for this is an obvious draw on liquidity, a fair value gap that broke a higher low, and a CISD, or obviously a sweep of an old high. Like, let's say right here this candle came up, swept this high, then we get a lower time frame CISD, right? But most of these examples are going to be trading off of fair value gaps, because that's pretty much all the examples that I found really quickly, because I pretty much just went into my journal and looked up trades that I've taken, and most of them happen off of fair value gaps. So that's what we are going to be trading off of, or we are going to be going over in this video. So if you guys haven't watched my previous videos, I'm pretty sure it starts with the draw on liquidity or how to find important fair value gaps. All of the things that I've taught since then have been going to this model, right? So right here, what do we have? A fair value gap that what? Broke above a high, right? And do we have an obvious draw on liquidity? Well, we have these equal highs resting right here, right? We have these equal highs. Yes, we don't get over there until later on in the day, but we can also just target the internal, right? So we can target from this internal to this internal high, right? So on the lower time frame, it goes from internal to external. So right here, 15-minute fair value gap. Going down to the 1 minute, right here, okay? So we have this 15-minute fair value gap right here, and we have buy side resting right up here, right? So the last down close candles before the expansion higher, right? So we have these 3 down close candles that made a new low, right? It's not these anymore, because these 3 have made a new low, breaking this low. So now we would use these 3 candles, right? So what do we have right now? We have a higher time frame key level, 15-minute fair value gap. Now we are waiting for a 1-minute change in delivery. When does it happen? It happens right here. We tap it once, we tap it twice, and this is where you would enter, right? Now you can, of course, if it's not too far away, you can just mark it buy, like in this example. But if it is a little bit far away, just set your entry right there, stop loss at the low, and then target that internal high, right? For a 3R right there. Okay, so you get a nice 3R, and then obviously we don't get to that buy side objective until later on in the day, but you guys can see that we continue to respect that. And then right here we come down once again, tap that 15-minute fair value gap, change in delivery right here on the 1 minute. Yeah, we do disrespect it a little bit, but if it is a true change in delivery, we should not violate the low, which is right there. And then you target that buy side liquidity, right? Market on close obviously delivers us there, but you guys see right here in these 2 examples, really straightforward. The entry model is super simple, and you guys will see that going through this video, right? Just always remember the time frame alignments, right? So here we are on the hourly. We have an hourly SMT. We have an SMT with this low, and we also have this hourly fair value gap, right? Now, would I use this fair value gap? No, I wouldn't. I would use this hourly swing low, right? So I'd use this hourly swing low as our higher time frame key level with this hourly SMT, and then going down to the 5-minute, right here is when we sweep that low. Right here we create that SMT. What happens right here? A change in delivery, right? Do we have an obvious draw on liquidity, right? We have this high up here. If we go to the 4-hour, we have this candle's range right here, right? And that's whenever you go to the lower time frame and say to yourself, hey, are we likely to sweep the high or the low first? And obviously in this example, 2 p.m. opens up and goes forward or higher. right? So right here, we also create a fair value gap. Why didn't we respect this higher one? Well, we came down and we tapped the change in delivery, right? So that's usually why I'll always keep my order down there. Or in this example, most likely I would have went and looked on the 15-second chart. Now I can't go back on the 15-second in this example, but I would have went on the 15-second for time frame alignment, 5-minute to the 15-second, and then when the 15-second had a change in delivery, we could actually go on the 1-minute. The change in delivery probably happened within here, right? But you can also use this 1-minute, right? Right here we close above, market buy, and then we deliver higher, right? And all that was framed from that hourly sweep, this hourly SMT, and then a 5-minute change in delivery. And if you're not confident in entering on the 5-minute, wait for the 15-second to align with the 5-minute, right? So you keep going lower and lower in time frames, and you can narrow down an entry even better, right? So next example, right here, 30-minute chart. What do we have on the 30-minute? A large fair value gap right here. We'll just mark it off as buy side because on the lower time frame it probably will. What's this 30-minute do? Breaks all these swing lows, right? So we're looking at this, right? And this hourly did not, did it open 10:30? No, it didn't open until this candle right here. Okay, so the hourly did not create a fair value gap until this candle opened. But the 30-minute was already telling us that we should go down to this low, right? So we have a 30-minute fair value gap. What aligns with a 30-minute? 3-minute, right? So right here, we have a sweep of this high. We have an obvious draw on liquidity. We are obviously very bearish on the day. What do we have right here? A 3-minute change in delivery. We close below it. We also create this 30-minute or 3-minute fair value gap. This is where I entered. Boom. Take profit. Stop loss can be somewhere right around here. Go down to the 1-minute. You can put it right there, right? Now, yeah, it does get very close to your stop loss, so you can obviously risk a little more and then just look for a 2R, right? Move your TP for a 2R, and then boom, right? Delivers right there. Okay, so you don't always have to enter on the change in delivery. If we create a fair value gap right above the change in delivery, just enter off that, right? So in this example, just enter on the fair value gap. If we don't tap it, we don't tap it. That's whenever you can go to the lower time frames. Let's say this never came up here. Right here, we create a bearish fair value gap. So let's say that these candles never came up here. Just enter on the 1-minute fair value gap after tapping the change in delivery. All right. So next example, a 15-minute, right? And I'm sticking to these lower time frames. So like the 15-minute, the 1 hour, I don't want to go to the 4 hour because nobody is interested in that. Now, for this example, why did I use this, right? Well, right here, we have a swing low, right? It's always the swing lows that get broken through with a fair value gap. And yeah, we do have this tiny one up here, but this one's more prominent. Like whenever you first look at this chart, what do you notice? It's this fair value gap right here, not this one. Like I didn't even see that until right now, to be honest with you. So we have this swing low right here with an obvious fair value gap right there. So what aligns with that? Well, we have this low right here. And if we go to the hourly, it's this 1 hour candle's low. We didn't sweep it until this candle right here. So we have an hourly CRT that can play out, and we are waiting for this fair value gap to get tapped and then 1 minute to deliver us to this low. All right. So what happens? We come up, we tap into this fair value gap. Right here would be our change in delivery. And what happens right here? A fair value gap that what? Broke a low, right? So you can enter on the fair value gap with a stop at the swing high with a TP at the low, right? And most of the time you're going to notice that these are at least 2 R's, right? Depending on where it is, most of the time it's always going to be at least a 2R, right? So right here, straightforward example. All these are very straightforward, right? So tap into it. We get a change in delivery right here with a fair value gap that broke a low. Boom, boom. All right. Now, last example. What do we have here? A 1 hour fair value gap that did not really, I wouldn't consider these any important lows, but do we have an obvious draw on liquidity? Equal lows, right? So we have equal lows here. That is our obvious draw on liquidity. So going down to the 5, like, look at that. That is an obvious draw on liquidity. What happens? We come up, we tap into it. Right here is our negative change in delivery. What do we have right above it? A 5-minute fair value gap, right? Boom, boom, with a TP there, right? A 2.8R. I mean, it's very, like, I don't know how much more simpler I can make an entry model. Someone asked me to go over Silver Bullet as well, so I'll probably go over Silver Bullet, but I just, like, since I started trading strictly CISD months ago, I mean, it's super simple. You could literally just be on your phone and be like, oh wow, we tapped a key level. Okay, let me go to the aligned time frame with it, wait for a change in delivery, enter, stop, take profit, one of them gets hit. Okay, I was either right or I was wrong. It's a very straightforward model, and I can go and back test it on FX Replay for you guys. So yeah, I can do that as well. Maybe I'll upload that for Wednesday's video and have 3 uploads this week. So yeah, this is the CISD entry model. It's a very simple concept. And yeah, that's pretty much it. So I hope you guys enjoyed this video. I will see you in another one. Hope you guys have a good trading week, because this is going up on Monday. So yeah, have a good trading week. Hope you guys kill it, and I'm out. Peace.